Hello everyone, my name is Kapil Shah and you're watching Quick Market Analysis by Filan Academy. So in this week we have observed that the market is down by 1%. It is exactly replica of a previous week but in a opposite manner. So in the previous 2 weeks we have seen that the highs are getting formed at the same level. So that is in a 19,850 level. On the lower side, prices has kept on making the low 19 around 19,500 level. And from past 4 weeks or a 1 month we can see that the prices are hovering in the same range only. So this is a typical sideways phase that we are looking at. So underlying tone for the market remains a sideways. We are near to the support level, that is at 19,500 level, but moving below the 19,500 level can cause a certain kind of further selling pressure towards its in a previous low. So that this is the 19,500 level. Multiple occasions the prices has formed this level, and moving below this level we can see that the prices can have the support near about by 19,300 to 19,200 level. In between 19,200 level or 300 level, in between we are having the 100 period moving average as well, so which can act as a potential support level. On the intraday chart, we have seen that the market kept on finding the resistance around the 19,670 level. So on intraday chart, previous day's high and couple of turning points that we have seen around this level. It has formed the kind of the inverted head and shoulder pattern, but once the prices drops below the right hand shoulder value, now it negates, it's in a bullish implication. So in that sense also, moving below 19,500 is a negative sentiment. On the higher side, we see a very short-term upside momentum once prices are able to breach the 19,670 level, which is a very important level, and then the next base level is the 19,850 level. So broadly, we expect that the market is likely to hover around this particular zone with a mild negative tilt. Nifty will be under pressure because all my short-term moving averages are sloping on the downside. So 19,670 below that level, there is a presence of sellers, and below the 19,500 level, it will confirm more towards a drift below or up to 19,300 to 19,200 level. Now looking at a sector specific, so this week we are seeing that crude oil, gold, silver that has did well comparatively, but the from a market specific, the good amount of traction that we have witnessed is from the micro cap, which is up by 1%, and a small cap which is up by 0.5%, and small cap 100 is up by 0.5%. So where the market is down by 1%, the latter part of the constituents of the market like a micro cap and small caps, they are doing well. In fact, in this particular week, mid caps has also witnessed some sorts of selling pressure. So let's say mid cap was down by 2%. Highest fall we have seen in this sector is realty. However, realty is under a very strong structure. It is an intermediate corrections that we have witnessed. But yes, oil and gas sectors which has not did particularly well into the previous time as well, and this has continued to come down. So these are the kind of the negative sectors that we are seeing. On a positive side, only one sector, that is an auto sectors, that is managed to end on the positive side. Rest of the stocks were on the negative side. So basically breadth is a little bit negative, but here if I pay attention to the bank nifty, so bank nifty is also at a kind of a support level, but still it is not that much valid support level or convincing support level. We have seen that kind of weekly chart. So this has acted as in a resistance earlier. So this has acted as a support level, and this week's market is at a support level. But then there is a no presence of buyer, and previous week whatever the upside momentum happened, it has not broken the high level above this level. So in the bank nifty, from a positional perspective, we can understand that bank nifty will validate its support level once it breaches the high of it, which is around the 44,700 level. So 1,000 from the current level to move up to confirm that the prices are positive. But that is something from the positional perspective. On a daily chart, again we have seen some sort of positive traction, but there is not that much momentum to take out the previous day's highs or immediate reactions. So again at a support level, but it kind of the cautious in that particular way. So yes, so for the bank nifty, 43,500 level to keep an eye on, and for the nifty 90,500 level is to keep an eye on. Drift below this level can cause a certain kind of the more negativity. As a small cap and micro cap stocks are doing well, so I like to share one particular stock from the small cap and micro cap stocks which has a kind of the potential structure. So there is one stock, Styrenex. Styrenex. So Styrenex is basically into the chemical company kind of, we can say. Looking at the technical structure of it, so let's say I was studying as a technical structure, and this is one of my favorite structure where the stock has undergone through a very huge consolidation patches, and when it starts to pick up its momentum, so it has a very good potential. So studying it from the year 1994. So here I am seeing that your prices has formed a certain kind of resistance. So resistance around 162 level, it has been there for a decade. It has given the breakout. So breakout that also get failed, and then prices has come down. I pay my attention that after my failure in the breakout, when stock is having this good structure, it has given the breakout, but it didn't sustain. And when the prices retraces back and take a support at a very meaningful level, so where earlier resistance level, support level, it has acted as a good support level, and then we have seen the bounce over there. Why we are talking about the year of 1995 and year 2000 kind of thing, where we are into 2023. The thing is that the more we know about the past, the better we are prepared for the self. Now the same thing you can see that the stock after coming to the lower level at the 70 level, it has picked up its momentum, and all the way stock has moved up to the 700 level kind of thing. So kind of 8x to 10x the prices has moved. Now, understanding this historical structure, I sense the same thing in a similar way. The prices has consolidated for a while. So here the resistance level, likewise here, whatever the breakout happened, it didn't sustain. So there is no sustainability in that case as well. All the way the prices has come down. Here the prices has taken the support at a good level. So here if I put my horizontal line, so I understand that this support level, support level, support level prices is already taken up. All the way prices has given the breakout as well in this case as well. So here there was a failed breakout, here this is a failed breakout, and this is also the failed breakout, we can say. After moving up, prices has come down very drastically, but now with this particular retracement where the prices has held, so again prices are at a support level. So this is a resistance level, resistance level, resistance level, support. So role reversal concept that is applied over here, and this is what the support level that we are seeing right now. Now the prices are starting to pick up its momentum once again. So it is collectively kind of a very huge consolidation patch that we are seeing. So starting from year 2011 and we are into the 2020. So 12 to 13 years prices has given the breakout failed, but it has remained more or less into the range. Now the stock prices are starting to pick up its momentum. So this is the one stock where you can have an eye on, keep that stock under the radar. In this video, we do not recommend it anything, but this is for the educational purpose. Whatever things that we have discussed about the market, about the sectors, and about the stock, this is for the educational purpose only. Thank you so much. See you in our next video.